Greetings, guys. Mokosi JPY, this is your mentor. Uh, let's just break it down. XAUUSD, which is the gold itself. Remember, a gold is similar as currency pair. Remember, currency pair, I told you that we have example, we have a euro versus USD. So currently right now, what's my main point? What I'm trying to say? I'm saying to you that we have a euro versus dollar. The minute we buy a euro, you are not buying a dollar, you're expecting the dollar to be weak. So the minute that you are selling a euro, you're expecting a dollar to be weak, to be strong. Remember, each and every currency pair, immediately once you're taking one position, let's say you say, I'm seeing a buy on the USD JPY. That means you say that a JPY is going to be weak. So at the same time, on the gold, we have the gold. This is this is USD. It's a gold of the United States. You see, this is the gold of United States. The name of the gold, it's a XAU, means the gold. USD means the dollar. So yeah, but it's okay. Let's just move it on. Remember previous days, I managed to tell you that what do you say, as a gold, the gold is gonna sell for some other reason, but indeed the market, it managed to fail to follow the technical side. I'm gonna just show you what's the side that I'm talking about, because previous days we was having this kind of pattern that we was expecting a gold to be to sell strong. The reason why I'm saying that is because of that time we was expecting 1, 2, 3 touches, 1, 2 touches. We was expecting a gold to come back in a lowest point, come back and correct before it can create another new high. But indeed, the things that we was expecting did not happen. So let me just break it down, the gold with a top-down analysis. Remember, guys, I'm using the top-down analysis for analyzing the market. No indicator, no moving average. I'm not using any tools. I'm a pure technical analysis. But even those people that are using Fibonacci, they are technical analysis. But me, I don't use a lot of stuff. I'm a pure price action, following only one concept on the market. So let's roll. Let's roll. So as we are back, guys, let's just break it down, the gold. Remember previous days, the market itself, we can see that we have that high that market managed to create. But if you put it on the line chart, it's going to be a closing price, but it's okay. So on the gold, the gold itself is an uptrend. This is the market given us. This is our corrective side. This is our impulsive. This is our corrective side. We are into the impulsive. So we don't know when we're going to have the corrective side. So anytime expect the corrective side on the side of the gold, because of, if you can check, since last year, the gold have been buying strong after breaking the strong level, the strong key level. So currently right now, let's see what's going to happen in future as we're going to analyze the gold. So we are in a 3 months. Let's just mark this key level that the market given to us. We have this kind of key level that market given to us, and then again, indeed, we have another key level that market given to us. So I'm gonna just move, go to another time frame, which is our monthly time frame. So we can see that that day, the market, the time that the gold it was buying, it managed to give a corrective, impulsive side and corrective. So currently right now we are into the impulsive leg, and then indeed, because of we did not come back and the market come back and retest on this level, the market is just given us an impulsive and correctively an impulse to the upside. So we don't know when the market is going to give us another corrective side. So I just wanted to make you aware so that you can able to understand. So let's just turn it into line chart so that you can able to understand the probability and possibility, what it can happen and what it cannot happen. So currently right now, I'm going to just mark that level here. because of once I'm using a line chart, it gives us the closing price. So I'm gonna just mark even the high that market given to us even currently right now, so that everyone can able to understand or to determine what we are really expecting. You understand, guys? So currently right now, let's just turn it into a candlestick chart. So we can see that that time, that corrective is this one. So currently right now, as I managed to mark the high, I just wanted to see that on the weekly, what's the market is going to give us here. Are we going to come back into this key level again before we goes up, or what's going to happen? Because of normally, this is our monthly time frame. And remember, it's a Saturday, and the candlestick of the weekly, it's already closed, but the candlestick of the monthly did not close, because of, if we can check the date, it's the 22nd of February 2025. So let's just turn it into a candlestick chart so that we can see the probability and possibility. So currently right now, guys, we are in a weekly chart right now. As we are in a weekly chart, we can able to see that we have impulsive and correction. So because of the new candlestick, it already closed. The previous candlestick of the week is already closed. So let's see what's going to happen. So currently right now, I'm going to just adjust the trend line, the key level. This is the key level that we have. So let's see, let's turn it into another candlestick, which is the daily candle. Because of the daily candle, it's closed by Friday. Yesterday, it was the 21st of February 2025. So currently right now, the daily candlestick is closed, and the weekly candlestick is closed. That means we're expecting two candles for Monday. We're expecting a new weekly candlestick to open, and then we're expecting a new daily candlestick to open. So let's just look at on the daily time frame what we can see, the things that we cannot see in other time frame. But just to move to another time frame, we're going to reveal the things that we did not reveal before. So let's move it again. So guys, as you can see, we are in a daily time frame. As we are in a daily time frame, we can see the price have been striking to this key level here. Market, it did give us impulsive. You can see they fetch and they went down. They went up and they went down. They went up. They went little bit down. They went up a little bit down. So currently right now, the candlestick of the day, it gives us a probability and possibility that there are high possibility that we can see that the market, it can sell to push the price to the downside. Because of normally, when you look at the candlestick, the two candlestick that we have for the daily candlestick, it gives us the reversal candlestick, the reversal trend. So let's just move it back. So I'm going to just mark the key level that I did not mark. So I'm going to just watch the highest key level that we have. This is the highest one that we have currently right now. We have that key level. So we wanted to see, are we still going to correct, or what's going to happen? So currently right now, as we can see, market, we have another level. This is the highest level that market given us, and the market itself, it broken. So probability and possibility, I'm really expecting even the market to drop. That's my expectation, according to what I see on the foreigners exchange market. But let's just go to another time frame so that we can reveal the things that we did not reveal. So let's just move it back again, which is on the H4, because of H4 is mainly used for the continuation pattern or the reversal. So currently right now, guys, as you can see, we're in a H4 time frame, but you can able to see that the current price have been struggling to push the price to the downside, to the upside. They've been trying to goes up, fail, goes up, fail. That's why Friday I did not trade. I was holding the previous setup. I was holding a German 30. Because of German 30, I saw a sell. So I was holding that pair. So currently right now, my expectation into what we call it on the XAUUSD, which is the gold himself. So I'm gonna just quickly mark another key level. Don't forget that this is what we call psychological level. So currently right now, main point, the price have been struggling to break it here. You can able to see even the reversal pattern that the market given us. It already given us some of the popular pattern that we know. High possibility that we can find ourselves into this kind of situation. We can find the market came back as the market went up and came back to this level and slower down to this key level. Once the price is gonna fail to respect that level, that means see, we may have a smaller corrective here that it may happen and push the price to this level so that we can able to shoot the price to the upside. So that let me mark everything so that you can able to understand the main point that I'm talking about right now. So currently right now, guys, as you can see, I'm still expecting the gold to push to this key level, to push the market to the downside, to this key level. But into that key level here, we may have a probability and possibility if the market fail to broken here, we may bounce here and shoot to the upside because of normally, if you can double check, if you really focus on the market, you're gonna reveal something that you did not reveal before. So currently right now, my main point, my main concept, I'm gonna just show you, which is was impulsive, and market give us a corrective, impulse, corrective, impulse, corrective, and another impulse, corrective, impulse, deeper correction, and market came back, keep correcting to that level and give us another impulsive leg, break it the previous. But if we can double check each and every time where it was a corrective, we have to break an impulsive, create a new high on the impulsive and correct, create a new high on another impulsive again and correct, create another new high, heavy momentum and correct again, impulse, drop down. As you can see, we correctively deeply here, but the more we get impulsive, we impulsive more, breaking the previous high. So probability and possibility, I'm still expecting the market to fall little bit before we can sell, before we can buy, because of gold is a product. So we're gonna realize that this is where we are right now. This is I'm gonna just say this is a corrective. Once that corrective is gonna be strong corrective, we may find ourselves into this key level before we shoot to the upside, retesting the previous level, which is this level that I'm talking about right now. Break it, the previous high, retest on the previous level before we shoot up. But once we fail to come back to this key level, we may bounce here. So let's move to another time frame so that we can able to understand the probability and possibility again, the things that we did not see. So as we can see, guys, we are in a monthly, we are in a what do you call it, a weekly time frame, as we are in a not a weekly, H1 time frame. So currently right now, my main concept, my main point is, you can double check here, you can able to see that what the market trying to give us, they give us a continuation pattern so that we can see the market drop to the downside. So currently right now, my main concept, my main point, I'm still expecting the market to push the price to the downside, because of we cannot always impulse every time. Somewhere, somehow, we need to correct before we can impulsively heavy. You get the point? So currently right now, another side that I can do, I'm going to just take another trend line and mark into this key level here and then see what it can happen. Let's just make it like this. Probability and possibility, we may find ourselves bouncing here and shoot up. So I given you everything that you wanted to see. Currently right now, I'm expecting a sell on gold. I don't know, guys, what you see. I'm expecting a sell right now on gold. I'm out, guys. Make sure you like, you subscribe, you comment so that I can put more content about the analysis. But in other way, probability again, because of I'm deeply technical analysis, so we may find ourselves having something like this. Keep correcting before we may impulse to the upside. This is what you wanted to see. This is what you wanted to understand. Let me just check about this thing of Fibonacci, because of have been after the impulse. I'm gonna just turn into another time frame, H4 time frame, because of this is our heavy impulsive move. So as that one is, it was a heavy impulsive move. I'm gonna just take it from here and put it here. Let's just make it here into this lower here, because of normally expectation, according to how I analyze the market, I'll just that impulsive, I will just let me no, wait, yeah, my Fibonacci retracement is supposed to be here. I must mark it from here and put it here. So currently right now, because of we have impulsive, that strong, we have impulsive. So I'm still expecting after that impulsive, I'm still expecting the market to come back and bounce into these two key levels. We may bounce here and goes up. Once we fail, we may bounce here again. But between these two, you see, 61 and 50. By respecting that level, once we fail this one, we may come back to this lowest, bounce here and shoot up. It's where that somewhere, somehow, we may find ourselves having something like this. And then we're going to say that impulsive correctively, we impulse later on, we broke it that high, we came back and retest, it goes up. It's a product. There is nothing we can do. I'm out, guys.